Hello, everyone, and welcome to another finnCap podcast. My name is Jonathan Bright. Today, we're talking IPOs and listing on the public markets. And joining me is Christopher Raggett, co-head of corporate finance at finnCap Group. Now, last week, Christopher explained to the Daily Mail's This Is Money publication that the appetite for businesses to float is expected to be particularly buoyant in 2021. So we wanted to delve a little deeper into what's going on here. So welcome, Christopher.
Hi, Jonathan.
First and foremost, I wanted to ask, what are the general market trends that we think will be driving activity in the IPO space this year?
Well, Jonathan, I think if you look back on the last 12 months, and that's been taken up primarily by the pandemic, obviously, you've seen that the public markets have been an awfully supportive place for growing businesses. So at the beginning of the pandemic, we saw a lot of balance sheet bolstering, people trying to protect themselves from the unknown, as it were, or even support themselves from the risks that they did know were coming down the track, particularly in the consumer industry. We then saw more opportunistic fundraisers as people tried to leverage their experience in the healthcare sector in particular and life sciences as to how they could help assuage this pandemic. And then pleasingly, towards the back end of last year, probably from the middle to the back end of last year, we've seen a return to what I'd call legitimate growth capital, and that is money coming in to support businesses not necessarily impacted by the coronavirus, but which are legitimate, growing, healthy businesses in and of their own right. In particular, if you look at the Elixir and Phonics IPOs that we did, I think those two businesses certainly fall into that category. And I think that's made the market sit up and take notice that there's still, UK PLC is still growing and still strong at the moment. And therefore, that while the public markets have been a supportive environment for growing businesses for all the reasons I've just stated, it's a good place for companies to continue their growth trajectory.
Now, we have some stats on sell downs at IPO. And if I just mention one, since 2018, 57% of raises on an IPO were for selling shareholders. Now, I'm aware that the finnCap team see that 57% figure as surprisingly high. Can you explain why that is?
Yes, it is. It is surprisingly high, I suppose, Jonathan. And the truth is that the capital markets, in particular, the AIM market and sort of for growing businesses, have always been seen as a place, particularly on IPO, where you would anticipate growth capital coming into the business. It's sort of a staging post on your growth journey, not necessarily an exit per se. And that's how fund managers have always traditionally perceived it. What we've seen, and perhaps this is driven by concerns around potentially capital gains tax increasing in March, are entrepreneurs being able to take a little bit of their money off the table at IPO and investors being willing to see that so that they can get their own seat at the table for the next stage of growth. So I think that 57% number is high, but I think if you were to drill into those statistics, you'd probably see that very rarely, if ever, is that an entire exit for an entrepreneurial team. It would be just taking a bit of money off the table and allowing other investors to join their growth.
Now, looking ahead, the current market conditions suggest that an IPO offers a resilient funding opportunity. So why is that moving forward?
I think over the last 12 months, again, no one had a crystal ball 12 months ago and could have foreseen that actually there'd be an influx of capital into the public markets. And I think the amount of capital that's been going through the system has been pleasing to see, because it has supported not just the businesses that have been on the market already, but those businesses looking to enter it as well. So as you say, it's been a resilient marketplace. It's been a place where people can support their ambitions and support, not just in the bad times, but also support their growth. I think we see that continuing certainly in the short term. There's no signs that the markets are ready to close just yet. But obviously, as we come out of the pandemic, hopefully towards the middle of this year, then I think that return to whatever normal will look like then will really shape the next 6 months and how the capital markets perform going forward.
And do you see any particular sectors or subsectors that you really expect to flourish, particularly on AIM?
we've seen that our technology practice is extremely strong and always has been. I think we see steady state typical software technology businesses as thriving, such as Phonics. Life sciences, for pretty obvious reasons, has had a very good year, and that looks set to continue certainly for the first 6 months. I think the real growing sector outside of those two traditional sectors will be in environmental and sustainability companies looking to list, and that we see an awful lot of opportunities in the renewable space as the energy transition continues to take hold and investor participation becomes greater in that energy subsector.
And I mean, just lastly, do you see any key kind of challenges for companies that might be on the road to listing this year?
I think there are two things. I think, firstly, timing is everything in life. And I think while markets have been particularly buoyant over the last 6 months, and we expect that to remain the same, companies that are thinking of listing would be well advised to start on that journey sooner rather than later, because, as I said, no one can foresee what might be happening in the second half of this year. And then the second challenge, I think, which is new perhaps to IPO candidates, is burnishing their ESG credentials and reporting from that side of things. So investors that we're speaking to are using ESG screening tools more and more, and that puts an onus on companies seeking to take their capital to match that screening and to be able to have the data to hand so that they can show that they represent a good ESG opportunity. To that end, we've actually partnered with WWG ourselves at finnCap and produced a sustainability reporting tool, which we expect would be very useful, not just to our existing listed clients, but to IPO candidates as they seek to show that they have the right ESG credentials.
Christopher Raggett, many thanks for joining us today. And if you'd like to get in touch with our team about our IPO or any of our range of financial services for growth companies, please visit www.finnCap.com.